SoFi gets billions of dollars for its loan platform, and it's a huge deal because it means that the company is not supposed to finance these loans by itself, and as a result the company gets huge volumes and fees without taking on almost any risks. Also, just recently Anthony Noto announced that by the end of this year they will be relaunching its crypto trading, something that they had a couple of years back, but they were supposed to pause it because of the regulations. Right now the regulations changed and they can bring it back. This is something that most of the investors were looking out for, and now it's finally happening. Hey there and welcome to the Market Monkeys channel. It's Julia here, and in today's video I will break down SoFi. But by the end of this video I will give you another strong fintech company that is actually much cheaper than SoFi in valuation, and the financials of this company are much better. And yes, it is possible because the company was listed in the UK market, so as a result it was not as hyped as SoFi, for example, or in fact all of the other US fintech stocks. But right now they just announced that they will be moving their main listing to the US. If throughout this video you will find this research useful, don't forget to support this channel by pressing a like button, subscribing and writing a comment. So let's begin with SoFi. Most investors love this company. The stock of this company has a strong momentum just a couple of months ago, although there are also haters. The share percent of float of SoFi, or the amount of shares that are being currently shorted, is about 13%, which I must say surprised me, because while I agree that the valuation of this company is expensive, the stock trades at a high premium, their growth and their progress is undeniable. Take a look at that. In Q1, revenue hit $770 million, which was up 33% year over year, and they beat the expectations by about $30 million, which is really impressive. Adjusted EBITDA came in at $210 million, up 46%. Earnings per share doubled from last year, and they're currently at 6 cents per share. SoFi has 11.2 million members, which is up 34% from the year before, and this growth is just insane. I remember just this past December the company was celebrating 10 million users, and investors and analysts were actually worried that the company will not be able to keep up with this rapid growth, but they did. And what is more impressive, they're not only growing in members, these people are actually using more products as well. They got to almost 16 million total products in Q1, which was up 35%, and this is exactly what I meant when I said that the company has rapid and undeniable growth. Now a few words about what is working right now and what to look out for throughout this year and even in 2026. So the financial services segment of SoFi, it's things like SoFi Money, Relay credit cards, etc., grew 100% year over year and got to $303 million. Lending, of course, is still the biggest chunk of SoFi's business, but I have to say they are working really hard to reduce this reliance on loans and to transfer to more fee-based stable income, which is of course a great piece of news. Besides that, it looks like their tech platforms Galileo and Technisys will be growing again. Anthony Noto just said that they have 10 new deals that they did not have just a year ago that are connected to these tech platforms. And of course, it's a big change from the slowdown we saw in 2023. This part of the SoFi's business, the segment, was almost not growing throughout the past few years. And I was actually one of the analysts that said that the fact that these platforms aren't working, the fact that these platforms aren't bringing in almost any meaningful profits, it's a red flag. So hopefully in 2026 we will see some rapid growth in this segment of SoFi's business as well. Besides that, the company gave some pretty good guidance. They're aiming for $900 million in adjusted EBITDA this year and about 27% margin, and the investing platform for the first time ever will be variable profitable, which means that the growth of the platform will not be draining any money anymore. After I discussed what has been going on with the company lately and what to look out for in 2025 and 2026, I want to talk about the problem of this stock, and of course this is valuation. SoFi trades at a premium valuation. The stock of this company is really expensive. Their forward PE ratio is about 50, when sector median is about 10. Price to book ratio is at 2.3, and this is almost double than the sector average. Basically, for this valuation to make sense, SoFi need to be growing at least how they grow right now, and as you can imagine, this is not guaranteed, especially not under current macroeconomic conditions. But even then, if the company will be growing at the same speed or even slightly faster, the stock of this company will be still majorly overvalued. Besides that, don't forget that huge companies, huge banks like JP Morgan and Bank of America are heavily investing in the fintech, in AI, and this could be a real threat for SoFi. For example, just this year, Bank of America invested $4 billion in fintech, so these companies have the scale and the resources that SoFi cannot match for now. But what if I told you that I have a very nice alternative that no one talks about yet, because they were listed in London and soon will be moving to the US market? I myself wanted to open this position yesterday actually, but I didn't have the time, so I will be opening it today. And one of the first reasons why I like this company so much is their incredible financial statement. Just look at this growth, it's so stable and so beautiful. The company is not so old, by the way, it's about the same age as SoFi, and the company is profitable for a pretty long time. And if you're wondering what is the name of this company is Wise. Wise offers some kind of international bank account for both individuals and businesses. And through Wise, people can hold money, for example, in different currencies. They can get local bank details in multiple countries, convert money between currencies at a very low cost, and spend it using Wise debit card. I'm pretty sure you or your friends or someone in your family had used Wise because it's one of the best in its space. The company has some amazing partnerships both with big and small names. Among big names, Google Pay, Morgan Stanley, Raiffeisen Bank, and others. But the best part is the stock of this company is much cheaper than SoFi. Don't get me wrong, it's not cheap because it's still a rapidly growing fintech company, but forward PE ratio of Wise is about 30. At the same time, forward PE ratio of SoFi is more than 50. So you can see the difference here. And I can actually argue that Wise is much more stable and currently, under current conditions, better company than SoFi, because first of all, they're not US-based company. So under current conditions, under current environment, in my opinion, for me at least, it's a big plus that the company is a UK-based company. And second of all, let's not forget that the big chunk of SoFi's business is still lending, and the margins of SoFi are not that stable as I would like it to be. By the way, my decision to buy Wise was based on many more metrics that I did not include in this video because, well, this video is about SoFi after all, but I have an article on Seeking Alpha where I describe why I think Wise is a great investment right now. You can go and check it out in the pinned comment section and in the description to this video. But after breaking down this company, I can say that either Wise is majorly undervalued and the stock of this company is supposed to jump much more, or all of the US peers are majorly overvalued, which is actually also possible, and these stocks supposed to crash much stronger. So here is where I stand regarding SoFi. I like this company, I like the direction where they're headed. It seems like the management of the company does some very right moves and everything looks great besides the valuation. The company is really expensive, the stock of this company is really expensive right now, for me at least. So if you are an investor of SoFi and you invested some time ago and you can stick for another 5 to 10 years, for a long time, I'm pretty sure it will be worth your while. But if you are an investor of SoFi and you're down on this position and you're thinking whether it's a good time to average down, in my opinion, this is not the perfect moment because still the economy is unstable, all of the conditions are unstable, and stock as overvalued as SoFi will be the one to crash the most. Doesn't matter what news we will get. It can be the news about jobs, it can be the news about inflation, doesn't matter what happens, SoFi will fly down the most. On the other hand, my attention grabbed Wise because the stock of this company is not so expensive, the company is profitable, the company is growing nicely and showing amazing results. It's not a hype stock, but it actually makes sense because they were listed in the UK and they will be just now moving to the US. So in my opinion, the interest of investors will pick up after they will be listed in the US market. I am really curious, have you heard about Wise before? If you had, what do you think about this company? Which stock do you prefer, SoFi or Wise? Have you used Wise? What do you think about their products? Please let me know all of this in the comments. I am really curious to hear from you. Don't forget to support our channel by pressing a like button and subscribing. I'll see you on our channel next time. Happy investing!